So the Qs have become a little bit more volatile at the beginning of August and entering into September. Let's take a look at the most recent price action to see if there's anything that we can learn. So first, let's put this move into perspective. We are currently about 47% off of the October low and about 9% off of the all-time high. All of the major moving averages are sloping upwards and we are in a nice orderly uptrend. One of the first things staring me right in the face is this head and shoulders top formation. I never like to see these form during uptrends as they generally indicate a trend reversal. Now we had this bearish engulfing candle which simultaneously formed the right shoulder right after Nvidia's earnings. Now generally what happens is the open of the candle becomes an important swing high and we trade lower, which we did in the short term, but in this case the market changed character and immediately took out that high before pulling back to the 50-day moving average. But as I always tell you guys, while technicals are very valuable, you cannot use them in a vacuum as they are just another piece of the puzzle. They provide us a small edge, but nothing more. Now, if we take a look at the weekly, you could even make a case that we are forming a cup and handle pattern, which is a very bullish continuation pattern. So technical analysis is definitely more of an art than a science, and what I'm seeing now is a corrective downtrend that is making up the flag of a larger bull flag that we have been forming almost all year. I think that we can chop around and maybe test the 100-day moving average and building a base before we move higher in Q4. Now, I find it interesting that volatility has remained low during this correction, indicating there isn't a rush to buy insurance for this market. Now, big tech is not trading like a monolith. While Apple and Nvidia are correcting, Amazon and Google are actually starting to break out, and even Tesla has been showing some strength. And I think this divergence is helping to explain why the averages are still hanging in there. So with all that said, let's not get too bearish and just let the market consolidate some of these gains. I do think this will ultimately culminate in higher prices, but let's just be patient. Now remember, the market isn't an uptrend, and while the market can have price corrections, the market can also just have a time correction. All we can do is keep an eye on swing levels, moving averages, and trend lines to make an educated guess where price will be attracted to and will likely have a strong reaction. I'm going to be watching this 355 level, which is where we bottomed in August, and it coincides with the major uptrend that we are in, the corrective downtrend that we are in, and the 100-day moving average. Now, maybe if we get down there, we can also take a look for a bullish RSI divergence.